STAG Industrial Stock, ticker symbol STAG, another famous monthly dividend paying stock. You voted for this stock to be the next analysis, so here we are. This stock is up 13% year to date, which is pretty unusual since most REITs are down, especially most recently. On the 26th of July, STAG Industrial presented quarterly results, where they beat on FFO but missed on revenue. Analysts have mixed feelings about the upcoming earnings. And most people love STAG Industrial stock because of the monthly dividend. And I understand why, with dividend yield at almost 4%. On top of that, they increased the dividend for 10 years in a row. And with the stock getting some momentum and being a very popular monthly dividend stock, it is the perfect time to do an analysis. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does STAG Industrial do? STAG Industrial is a real estate investment trust that is involved in the acquisition and operation of both single and multi-tenant properties. Although the majority of the portfolio is single-tenant industrial properties throughout the United States. The vast majority of the company's real estate portfolio is comprised of warehouse and distribution buildings. If we dive in the most recent earnings report, we see that STAG reported a $0.29 net income per share, compared to $0.18 in 2022. FFO was reported at $0.56, which is equal to 2022. And to be honest, this is something that I don't like. FFO is one of the most important numbers with REITs, so definitely keep an eye on this number. NOI increased 4.3%, which is pretty decent, and occupancy rate was at 97%, which is a great number. The interesting thing about STAG Industrial is that they focus on industrial properties like warehouses. In total, this market is more than 1 trillion in size, and right now STAG Industrial is sitting at less than 1% market share, so there is plenty of room to grow. They also do a lot of acquisitions to grow the business, and the pipeline looks pretty decent to me. STAG Industrial is widely diversified with a portfolio span of 60 markets, and the largest market exposure is 7% of the ABR, which looks pretty good to me. The largest tenant is only 3% of the ABR, meaning that they are very well diversified. The top 20 tenants represents less than 20% of the ABR, which is again also very nice. 50% of the tenants are publicly traded and 84% of the tenants have a revenue of more than 100 million. 59% of the tenants have revenue higher than 1 billion. Amazon is the biggest tenant with only 2.8% and no other tenant represents more than 1% of the ABR, which is very nice. Another important number for me is the net debt to EBITDA. I prefer a number in the range of 5 to 6.5. Right now STAG is sitting at 4.9, which is looking good. There is still some room to grow here. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. STAG is a 6.5 billion market cap company. PE ratio is not a fair metric to use with REITs, so I will be using the price to FFO instead. Right now it is sitting at 16.4, indicating they might be fairly valued right now. Later in this video I will show you my 3 price targets for STAG Industrial stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 681 million and in this graph we see that revenue went up in the long run. To me this looks really steady and consistent. We see that margins are going up in the long run, which is something that I really like. EPS is going up in the long run as well, and for a REIT it looks pretty steady. Analysts expect a decline in EPS in 2023 and 2024, which is very interesting. For the revenue growth it's a pretty different, with mid-single digit growth expectations in 2023 and 2024, but after that they expect revenue to slow down. Return on assets is sitting at 3.1%, which is a low number, even for a REIT. Return on equity looks a bit on the low side, and the most important number, return on invested capital, is sitting at 2.5%, which is again a low number, but it is slightly higher than the 5-year average, so that is something that I do like. Current ratio is at 1.37, which is a great number for a REIT. Nothing special to mention here. Right now, STAG Industrial has 2.4 billion in debt. I prefer companies that can pay down at least a big chunk of the total debt with the total cash position. STAG has 85 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay down debt and pay dividends. And all other things of course. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 4%, which is a great number. Annual payout is at $1.47 and payout ratio is at 65%, which is right below the average for REITs. And keep in mind that STAG Industrial pays a monthly dividend instead of a quarterly dividend. The 5-year growth rate is at almost 1%, which is pretty low, but they have increased the dividends for 10 years in a row. And if you take a look at these numbers, the dividends paid since 2012, you see that STAG did increase the dividends at a slow rate. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow steady on from here. Overall these dividends look pretty interesting to me, but how about the historical returns? I decided to compare STAG Industrial stock with the overall market, in this case the S&P 500. Next to that I added FR and EGP. On the 5-year chart we see that STAG Industrial underperformed the S&P 500 by a small amount. In total, STAG returned 62% including dividends. EGP had the highest return and FR did also beat the S&P 500. On the 1-year chart it looks pretty similar, with STAG beating everyone. The S&P 500 had the second highest return with 30%. On the 6-month chart it is the S&P 500 with the highest return, 12% in total. STAG Industrial is really close with also almost 12%. On the 1-month chart it is again STAG Industrial having one of the highest returns, this time together with EGP, but the difference between all of them isn't that much. So bottom line, STAG underperformed the S&P 500 long term, but it is getting some momentum lately. So could this be the perfect time to buy STAG Industrial stock? Well, let's check the 3 price tags that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 8, 9 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 28, 29 and 30%. And for the free cash flow margin I'm putting in 53, 55 and 57%. For the PE ratio I'm putting in 20, and for the price to free cash flow I'm putting in 16, 17 and 18. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now STAG Industrial is sitting at $36. I hit analyze and we see a lot of green numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $36, which is the current stock price. We have a mid price target of roughly $42, and we have a high price target of roughly $49. To me, the mid price target is the most justified here, indicating that this stock is undervalued right now. My final conclusion on this stock is that I really like the business. They have shown that they are able to grow in a steady and consistent pace, which is something that I really like. The thing that does concern me a bit is the FFO growth right now. So that is really important to keep your eye on. Other than that, most fundamentals look pretty good. And from a dividend point of view, things look also pretty good to me. They pay a 4% monthly dividends, which is very nice. But they don't take any risks, which I really like. Payout ratio looks great and they have been steadily increasing the dividends for 10 years in a row. I would prefer a higher growth number to be honest. But from a value point of view, I really changed my opinion about STAG. Right now things look pretty good and according to my numbers they are still undervalued. The stock created some momentum lately, but to me, as I said, they are still undervalued. For now I'm adding more shares to my portfolio whenever a small dip occurs. If not, then I will try to keep my cost average as low as possible. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.